Hey, my guy, that's actually a good question, but let me just try and clarify this for you. I did make videos about, this pin bar and engulfing on my YouTube channel, but let me just make a quick video and show you how you can use those two as sort of a confirmation before you can take your trades, before you can execute. So I see you are saying with the pin bar, you are waiting for the price to close above. But normally that's not how I said you should do it. I said when the price comes to your significant area of maybe support or resistance or a trend line, and it gives you this, and you want to trade in the opposite direction. Let's say it was coming down and then it hits a bullish trend line, then it gives you this. When you're saying you want to buy, I didn't say you must wait for this to go and close there. I just said for the fact that the price formed this, for the next bar, just for the next bar to break that range and go that side, you are more than welcome to go in. That's why I said this one you can enter with what? You can just go and put a buy stop. You don't have to wait, because sometimes you'll find that this momentum that pushed the price to go and close up there, it can carry over even in the next bar, and you find that the next bar is this long. Then it means if you're waiting for the next bar to close before you enter, are you going to enter there with a buy? Imagine already the momentum to the upside has been pushing like that, and you're trying to enter there. Don't you think that it's too late for you to buy now? So that's when I said put a buy. You can enter with the buy stop just above the pin bar, so that should the next bar violate the range of that pin bar, then it will be sort of a confirmation for you to enter. That's what I said in terms of the pin bar. Now, the next concept that I think it was confusing you, King, is the issue of engulfing. You are asking if you should wait for the engulfing bar to close and then you can enter. Again, I don't know. I've never done it like that. If you think it will work, then if, let's say, for instance, that's not how I do it. That's not how I would encourage you to do it. If, let's say, this area or this area, this area is the area you're interested to selling. I'm just giving an example. You wanted to sell there, and then the price, let's use a different color. The price comes up, and then it gives you this bar, and then the next bar engulfs it. If you wanted to sort of sell from here when the bar closed here and put your stop loss above, it could have worked for you, but that's not how I would do it. Now, normally, the way I would encourage you to do it with the engulfing, I want the engulfing to be on the higher time frame on the sequence that I picked. So if I decide that I'm going to trade, let's say daily and H4, meaning I'm going to take my trades on H4 and then I'm going to use my daily for the trend, right? I want the engulfing to be here, and then I'm going to take my trades here. So let me give you an example. I think we did have something here. I'm not gonna go into like a deeper analysis that I made. When was it? When I made it, I think 4 days ago or so. There's a video on YouTube when we said we are interested in taking sales from around there, and let's say, like I said, you are trading H4 and daily. This is your daily, and then you hit the area, because you can't just go and enter. You must wait for that confirmation, and then look what your daily did. Your daily did give you what? Engulfing. But I can't say when it closed there, I go and sell and put my stop loss above there. I can't do that. But rather, the fact that I know the highest time frame on my sequence is what it's pointing to the downside, it gave me engulfing. And chances are that this very same bar that moved it down, it probably broke the trend line that you may have when you're going up on your execution time frame, on your H4. H4 that move to the upside, it probably has something like this, even though here it seems like it's just a smooth move to the upside. But when you're going down to your H4, you'd find that it was actually moving like this. And that engulfing bar, this one here, it can give you maybe 4 bars to the downside on your H4, meaning what? It broke the trend line. That's what you're most likely going to find when you're moving down in scale, or when you're moving down on your sequence. So let's check what happened on H4 at the very same area. Let's go to H4. Yes, this is what I meant. You can see that we were going up. This is the move when we were going up, and we did have a trend line there. And that move to the downside, what did it do? It broke the trend line, and it also broke what? The area of support. So we did give reasons why we're not buying on this one, but that's a story for another day. We made a video on that one. That's not the point here. The point I'm trying to show you is that when I say engulfing, remember this move, this very same move that went, okay, let's use a much brighter color. This very move is the one that gave you that engulfing on daily, right? Now I know daily is pointing to the downside, and I know that on my execution time frame, which is H4, we broke the support and we broke the trend line, meaning I'm more than welcome to sell. I'll be going in the direction of the engulfing that I have on the highest time frame on my thing, on my time frames that I'm trading. So meaning, if the price, just that here didn't go there, if the price had went to this was the perfect area to take your sell there. It's just that you can see in this case the price turned there. If it had went there, that's where you'll be like, I'm executing because of what? I have engulfing on the higher time frame. I have engulfing, you know. You see this move, these bars, two bars here, if one of them had just went with the pin bar, maybe until that point, it would have executed. It would have touched your area where you would have taken your trade and be like, I'm trading in the downside because of what? We hit that key area and then we had the engulfing. So if I'm going to lower time frames and then I find that we did have this, broke it, I'm more than welcome to sell this because of what? Everything is pointing to the downside. That's how you should do it, my guy. That's how you should do it. The pin bar, you do it on the very same, you want it to be on the same time frame where you're executing. If I'm executing H1, the pin bars, I need them to be on what? On H1. If let's say I'm still trading the H daily and what? And H4, right? It doesn't mean if I get a pin bar on daily, it's also a good sign to say that, oh, the momentum seems to be shifting. But because that one, I cannot enter it on daily. I can't just buy this. It's too big for me to just buy there and put the stop loss there. It's going to be too big. But if it happens like this, it means when I go down to my smaller time frame, if I find an area or a reason to buy, I will do it because I know daily is sort of pointing up. But the one of engulfing, I wouldn't encourage you just to wait on your execution time frame and then we're going down and then we have engulfing like that. And then imagine it closed there. You want to buy. Already you can see the price has been going up. What if now it wants to rest before taking off? That's not how I would encourage you to do it. I would rather say have the engulfing on the higher time frame on your sequence. Then you know that when you're going down, you just want trades in that direction. All right, I hope it sort of clears the confusion that you may have, my guy. So if you want more concepts like this or more videos like this, I do have a lot of them on my YouTube channel. So you can just visit there and then you'll find lots and lots of videos that I'm 100% sure that you're going to find them helpful. But here I just wanted to clarify what the thing when I said when I'm waiting for confirmation, you can just focus on what? Engulfing and rejection bar. And then here I just wanted to show you how to use those two. All right, my guy, I hope you are sorted now. Sharp.